They're about to hand the paper market the quietest window it gets all year, and most people won't even realize it happened until it's over. China shuts, Shanghai goes offline. And the question isn't will silver move? The question is what happens to silver when the world's most important physical hub steps away, and the West is left alone with the biggest, most leveraged paper casino on Earth. OG Jhon AG here. If you're new, understand this channel in one sentence. We don't worship predictions, we track the mechanics. Because the mechanics tell you what the headlines won't. Now let's lock the dates first. Because if you get the calendar wrong, your entire read is wrong. Shanghai Futures Exchange is closed for Spring Festival from February 15th to February 23rd, and trading resumes February 24th. No continuous trading on February 13th. That's not my opinion, that's the official SHFE schedule. Same story on Shanghai Gold Exchange, closed February 15th to February 23rd, resumes February 24th. That's the window, that's the vacuum, and when that vacuum hits, something predictable happens. The physical referee disappears for a week, and paper gets bold. Here's the part people don't like hearing because it sounds too simple. But it's the truth. When Shanghai is live, East versus West creates friction. Premiums, arbitrage, delivery pull, real metal flow, those are constraints. When Shanghai is offline, the constraints loosen. And when constraints loosen, paper can paint the tape. Not forever, but long enough to shake weak hands, trigger stop runs, and manufacture a narrative. That's why this week matters. Not because I'm here to scream moon or doom, because when you know the rules of the week, you stop being the victim of it. So what do I expect while Shanghai is offline? Volatility that tries to look like certainty, big candles, emotional headlines, aggressive commentary about demand collapsing or silver is dead, right when physical markets aren't even participating. That's the trap. And the way you avoid the trap is you separate price from process. Price is what you see. Process is what's happening behind what you see. Now pause before we go any further. If you actually want the unfiltered data-first lens, comment OG Jhon AG under this video. Not because I need validation, because it tells me who's here to learn the game, not just feel something for 10 seconds and swipe away. And for the record, I do not sell signals, courses, mentorships, memberships, none of that. If someone impersonates, block them. I'm only here to teach you how to read the structure so you don't get farmed. Now let's talk about silver itself, because a lot of you are watching the number and missing the story. Silver has two identities at once. It's money and it's an industrial input. That dual identity is exactly why the market is so easy to manipulate on paper, and so hard to satisfy in reality. When paper dumps, you can sell infinite contracts in milliseconds. When physical tightens, you can't conjure ounces out of a screen. And that's why the Shanghai window is so important, because it's a moment where paper can pretend the second identity doesn't exist. If you're watching this around the time it drops Sunday night India, Sunday day in the US, look at your screen and notice how narratives already form before liquidity even fully returns. Weekend commentary, thin books, futures tone setting, experts front-running Monday. This is where retail gets emotionally positioned into the wrong side of the next move. Because the market doesn't need you to be wrong forever. It just needs you to be wrong at the wrong moment. Let me ground this with one verified reference point, so we stay honest. USA Gold's daily note from February 13th shows silver spot around $78.90 on that day. It's not a promise that silver is that exact number now. Prices move, but it frames where we've been sitting into this holiday. That matters because this Shanghai closure doesn't happen in a calm, sleepy market. It happens when volatility is already elevated, and people are already jumpy, and jumpy markets create the perfect environment for forced behavior. Now let's do the real question. What happens to silver while Shanghai's offline? I'll tell you what usually happens, and then I'll tell you what I'm watching this time that could flip the outcome. Usually paper leans bearish first. Why? Because the easiest move to manufacture in a thin levered market is down. Down moves trigger liquidations. Down moves trip stops. Down moves create margin stress. Up moves create pain for shorts and demand delivery pressure. So if you're a paper operator and you get a week where the physical hub is offline, the first instinct is to test the floor. And the way they test the floor is by pushing until something breaks, either price breaks or sellers fail to appear. And that's the key phrase, sellers fail to appear. Because when Shanghai comes back online on February 24th, the first thing that matters is not the Western headline. It's the premium behavior. It's the did physical follow paper down question. That's why the holiday window is a psychological operation as much as it is a market event. If paper can slam silver while Shanghai is offline, and then Shanghai reopens and doesn't chase the dip, doesn't confirm the weakness, then what you just saw was theater. But if Shanghai reopens and gaps down hard, follows Western paper lower, then yes, the weakness was global. So the holiday is not just a closure, it's a test. A stress test for who is really in control, paper liquidity or physical demand. Now I'm going to say something that might save you money. Stop treating the holiday week like a week where you must act. This is the week you must observe. The best operators in the world aren't excited during a trap window. They're patient. They let the trap trigger, they let the crowd pick a side emotionally, and they watch whether the market can actually follow through. Because follow through is expensive. Follow through requires real participation. And that's exactly what's missing when Shanghai is offline. So here's how you read it in real time. If paper pushes silver down and it's a clean move but volume doesn't confirm, and it's happening in odd hours, and it's happening while the physical hub is closed, treat it like a probe, not a verdict. If paper pushes silver down, and you start seeing evidence of physical tightness in retail, spreads widening, delivery chatter rising, then it's paper trying to front-run a constraint. If paper pushes silver up hard while Shanghai is closed, that's different. Then somebody is panicking on the short side, or somebody knows something. Either way, the point is the holiday week is about information extraction. The market is trying to extract information from you. Your job is to extract information from the market. Now let me translate what that means for the average person watching this video. You're going to see price movement that tries to bully you into a decision. Don't let a bully make your plan. Your plan must be built on levels, time frames, and confirmation. If you're a trader, you need a level where your idea is wrong. If you're a long-term holder, you need to understand that volatility is not the same thing as thesis failure. Most people lose not because the asset was wrong, but because their time frame didn't match their behavior. And that brings me to the one thing I need you to do right now. Decide what you are. Are you trading paper volatility, or are you positioning for the physical story? Because the Shanghai closure window punishes confusion. If you are a trader and you pretend you're an investor, you'll hold through a move you can't stomach. If you are an investor and you pretend you're a trader, you'll get shaken out at the exact wrong time, and then buy back higher when Shanghai reopens and premiums reassert. The holiday window is where the market separates the confused from the disciplined. Now, let's go deeper, because some of you are here for the mechanics. Why does Shanghai being offline matter specifically for silver? Because Shanghai is not just another market, it's a pricing and physical distribution center that represents real demand, real settlement, and often a different incentive structure than the West's paper-first benchmark culture. When Shanghai is open, you can't ignore that spread between local physical willingness to pay and Western paper quotes. When Shanghai is closed, that spread can't update in real time, and the Western quote becomes louder than it deserves to be. That's not conspiracy. That's just how information works when one major node is offline. And this is where the mainstream always fails you. They report the number and call it the market. But the market is not one number. The market is a network of constraints: inventory, delivery capability, funding rates, margin rules, dealer supply, industrial procurement schedules, and yes, human fear. So during this closure, I want you watching three storylines, not one number. First, what paper does when it's alone. Second, what physical signals look like despite the closure. And third, what happens the moment Shanghai reopens. Paper alone can do wild things. But paper alone cannot mint silver. That's the line. And when you understand that line, you stop being emotionally manipulated by a screen print. Now let's talk about trust, because I know what you're thinking. Okay, OG, show me something solid. Here's solid. The closure dates are verified from SHFE and SGE themselves. That's your calendar anchor. The second solid point is how you can verify what I'm saying without trusting me. You can literally read the official exchange schedules yourself, anytime. That's the whole point of this channel. I don't want blind followers. I want sharp observers. Now with that anchor, here's the big psychological twist that drives retention and keeps you safe. During the Shanghai shutdown, you will see people become extremely confident on both sides. Bears will say, see, demand is gone. Bulls will say, see, they're panicking. And both sides will cherry-pick the same candles to prove their religion. Your edge is to refuse religion. Your edge is to watch confirmation. So what is confirmation? Confirmation is a violent move with participation, not just a wick. Confirmation is displacement that holds, not a spike that fades. Confirmation is when price breaks a key level, then retests and respects it. Confirmation is when the market spends time above resistance or below support, not just tags it for a screenshot. Anyone can post a screenshot. Only the tape can prove itself. If you want a simple mental model, the holiday week is when the market tries to create a story. The reopen week is when the market has to live with the story. Now, let's bring it back to the title. China shuts Monday. That line is doing two things. It's telling you about timing, and it's telling you about asymmetry. The asymmetry is this. When China shuts, Western paper can still trade. When Western paper trades, it can set a narrative, while the East can't immediately respond. That asymmetry is where the tricks live. But it's also where opportunity lives, because if paper overreaches, it leaves footprints. And footprints are what we trade, not emotions. Here's what I'll be watching in the US session as this unfolds. Not just up or down, but how. If silver sells off into the closure window and it's orderly, heavy, and keeps making lower highs, fine. That's the market leaning risk off. But if silver sells off and then suddenly can't break further, if it keeps tapping a level and bouncing, if the sell pressure stops working, that's when you pay attention. Because failed moves are more powerful than successful moves. A successful sell-off is normal. A sell-off that fails while the physical hub is offline is a warning. The market tried to bully price lower and couldn't. And when Shanghai comes back online, that's when the real repricing can happen fast. Now some of you are thinking, so OG, are you bullish or bearish? And the truth is, I can be both depending on time frame. Short term, anything can happen in a closure window. Mid-term, the reopen is the truth serum. Long term, the reason people care about silver at all hasn't disappeared. It's monetary insurance plus industrial necessity in a world where supply chains are not as smooth as the textbooks pretend. But I'm not here to sell you a fairy tale. I'm here to show you how to survive and read the next 7 days. So let me give you the two scenarios, without hype, without fear, just mechanics. Scenario 1. Paper uses the Shanghai shutdown to push silver down, trigger liquidations, and print headlines about demand fading. Then Shanghai reopens February 24th and we see immediate premium resilience, buyers step back in, spreads widen, and the Western dump looks like a discount coupon. In that scenario, the holiday week becomes a bear trap, and the rebound can be violent because positioning got one-sided. Scenario 2. Paper pushes down and Shanghai reopens and confirms the weakness. Physical follows, premiums compress, and the West wasn't manipulating. It was front-running real demand softness. In that scenario, the holiday week wasn't a trap, it was an early warning. Notice what I did there. I didn't ask you to worship one outcome. I asked you to watch the reopen behavior. That's how you keep your trust. That's how you don't become the guy who is right on Twitter and broke in real life. Now I also want to address the biggest retention killer on YouTube and finance. Fake certainty. People click because they want certainty, but certainty is how they get scammed. So I'm going to give you something better than certainty. A checklist in your head, without me listing it like a list. 1. Watch whether the move has volume and follow through. 2. Watch whether key levels hold. 3. Watch what happens the first 24 hours after Shanghai reopens. And 4. Watch how quickly the narrative changes, because narrative flips are usually a sign of positioning pain. And if you've been here a while, you already know the rule. The market's job is to transfer money from impatient hands to patient hands. A holiday window is basically the market yelling, "Be impatient, right now." Now I'm going to make this very real for the person listening with headphones on, driving, working out, scrolling at night. You don't need to win every candle. You need to avoid the one candle that breaks you. Most losses in metals come from leverage plus confusion plus ego. The Shanghai shutdown week is designed to trigger all three. So if you're leveraged, you need to be extra honest with yourself. If you're not leveraged, your advantage is that you can watch without being forced to act. And I'll say this clearly for YouTube safety and your own protection. This is not financial advice. I'm not telling you to buy, sell, or hold. I'm telling you how to read a calendar-driven liquidity shift and how to avoid being emotionally harvested. Now, since you're here, I want you to do one thing that separates pros from amateurs. Pick the moment you care about. Is it tonight's open? Is it the first US session without Shanghai? Is it the first Asian session when Shanghai is closed? Or is it February 24th, the reopen? Because each moment answers a different question. Tonight answers, what's positioning like? The closure sessions answer, how far can paper push without the East? The reopen answers, did paper overreach? If you're mixing those questions, you'll mix your decisions. And that brings me to the last point, the one that makes this title so powerful. What happens to silver while Shanghai's offline? The answer is not one number. The answer is, the market reveals itself. It reveals whether price discovery is real or staged. It reveals whether selling is conviction or just leverage liquidation. It reveals whether the bid under silver is fragile or stubborn. And it reveals whether the West can push the story without the East, or whether the East comes back and rewrites the story in one session. So here's my ask, and then we're done. Stay sharp this week. Don't marry a candle. Don't marry a headline. Don't let a closure window bully you into a decision you'll regret when Shanghai reopens. If you get value from this lens, comment OG Jhon AG, so I know you're locked in. And if you want me to do an update, the moment Shanghai reopens on February 24th, tell me in the comments. Do you want the focus on premiums and spreads? Or do you want the focus on price levels and confirmation? Either way, we'll track what matters, verify what we can, and ignore the noise. OG out.